I'm about to show you a method which is going to allow you to print infinitely $500 a day, even if you've got a small portfolio. If you have a portfolio worth around $500 to about $1,000, this method is going to help you emerge victorious, regardless of what Solana is doing. Even if Solana is having a downtrend, even if Solana is having minimum volume, if you are grinding, trenching on a daily basis on Axiom trade, then this method is definitely going to be something that you definitely need to be aware of right now. So I'm going to be giving you the breakdown of the whole strategy, how you're supposed to sort of have an upper hand with regards to sort of beating the markets and just basically making your 1 to 2x each and every day. So 3 days ago, I was backtesting a new strategy that I really wanted to prove that it works. And of course, when it comes to backtesting, right, in order for you to sort of have a very good trading strategy, sometimes you're going to be able to lose money. And the sole purpose of this particular trade was for me to understand the things that do not work. Okay, so as you can see right over here, this trade was purely for educational purposes, and I wanted to figure out the best trading strategy, especially when it comes to high volume. Okay, high volume, slow momentum build up. Okay, so as far as this particular method of trading is concerned, what you are not supposed to do is trade the breakout. The best and the most lucrative thing for you to do is trade the support of the block 0 right over here, block 0 and block 1 order blocks. So let me also indicate that. So trade support of block 0 and 1, block 0 and block 0 and block 1 sellers. Okay, those are the block 0, block 1 order blocks. Okay, so let me also include order blocks so that we are on the same page. Now a lot of you might be wondering and trying to figure out what block 0 and block 1 order blocks are, and just basically what order blocks are. If you do not have an idea, please check out the link in the description. There's a lot of explanations that I've done. I don't want to sound like a broken record, and this is one of the reasons why I really like people to research, so that you do not get spoon-fed each and every detail. Okay, so basically block 0 and block 1 are the first initial buyers of any particular project, the developer and the snipers. So once a meme coin is created on Pump Fund, the first people to buy are number one, the developers, and then number two, the snipers. The snipers get in because they've got very fast nodes, they've got very fast transactions, so they are instantly able to get in as soon as the contract is deployed. So when these people decide that, okay, it's time to exit, once the coin has been deployed, right, this is your deployment level. It's been deployed, aka it's been launched. So it moves up to a certain threshold, then it finds resistance. The first set of resistance is mostly dominated by these guys. It's mostly dominated by the block 0 and block 1. So now let's go to the chart. This particular chart was launched right over here. It was worth around 3.3 K, and it instantly pumped all the way to about 174. So this particular first major sell-off after a very good pump is what I am referring to as the resistance level, caused by the fact that the block 0 and block 1 early investors are selling. So this particular threshold is a very important trading data set that you really need to understand and be able to manipulate right around this particular level. So let's even change the color. We put it as purple. Okay, once you are able to identify block 0 and block 1 order blocks. Okay, so when it comes to order blocks, you've got bearish and bullish. In this particular case, you do have right over here bearish order block, right there, and you also have a bullish order block right there and also right there. So when it comes to this trading methodology of high volume, slow momentum, what you want to do is understand where block 0 is, okay? Block 0 and block 1. Find out the order block before a continuation of a pump. If you figure out where the order blocks are in terms of the support and your resistance, then you're going to be able to trade the support. So with this method, you are for the most part only going to be able to get 3 trading opportunities. Okay, 3 trading opportunities, and the lifespan of these trades are most likely going to be going to about 250k. Remember, this is the lifespan, and this is where we expect the price of this particular project to sort of rug pull. One thing that you have to understand and be comfortable with, or rather get familiar with or get used to, is eventually every coin is going to end up rug pulling. So if you are trading meme coins and you are actively in the trenches, whenever you make a trade, assume it's going to rug pull. What we do on my YouTube channel is we've got incentives and mechanisms to protect us from getting rug pulled. And this is one of the reasons why we use Sniperoo, because we've got a trading stop loss. We also have static stop losses and auto sell levels. So even if a coin is going to eventually rug, we are safe and we're not going to lose our money. Our money is not going to go back to zero. So if you guys are not really familiar with what I'm saying, please book a one-on-one consultation with me. I'll walk you through everything. You're going to become a pro trader and so on and so forth. I can't explain every detail in each and every episode. It's impossible to do. So one thing you have to always remember is based on the filters. And by the way, you guys already know the filters. We've talked about this a number of times. If in case you are new on my YouTube channel, please check out my previous episodes. So the filters that we're going to be mostly concentrating on as far as the high volume, slow momentum are obviously multiplying the market cap by 0.7 and the volume by half. Okay, so basically the formula for the filters in terms of volume, because we're mostly concentrating on volume and market cap. Okay, so as far as the volume is concerned, volume formula basically is 0.5 multiplied by the graduation threshold. Okay, graduation threshold. So the excuse me, the graduation threshold is basically the amount it takes on a daily basis or on a particular said day to hit radium. So in today's situation, the graduation threshold is at 57,700, so almost 60,000. So we'll just say 58,000. So what you're going to do is, in your filters on Axiom Pro, right? If you go to axiom.com, you go to your filters and you figure out the value of the volume, which is going to be 0.5 by the graduation filter. So it's roughly going to be about 30,000 in our case, because this right over here is our value. So 0.5 multiplied by 58,000, we're going to get about 24,000 somewhere there, or close to 30,000 US dollars. Then as far as your market cap is concerned, right, your M cap, your formula is going to be 0.7 multiplied by 60,000, which is obviously the grad threshold. Okay, so each and every day you figure out the formula. So when you go back to your Axiom, okay, you go in filters, you go to your pulse. If you are looking for the final stretch and also the migrator, just go in there, go to metrics, put your volume right over here. If it's going to be 25,000 and the market cap could be around 35,000 approximately, you know, just get the formula in there. And then as far as the time frame is concerned, put it at 60 minutes or 30 minutes as far as the final stretch is concerned. Okay, so when it comes to final stretch, you put 30 minutes, because remember, we have a slow build up. The most important thing that we're looking at is the slow momentum. Okay, so in terms of slow momentum, your time frame is going to be a little bit late and slow. We're not going to be using 5 seconds, we're going to be using 30 minutes here on the final stretch, and on the migrated stretch we're going to put it at 60 minutes as the maximum time frame. Then here you basically use the same formula. Okay, you can even just like bump it up a little bit, it doesn't really matter, but if you put the same formula right over here, you guys are going to be good to go. So the only differentiating factor as far as your filters is concerned is obviously the time frame. Okay, so on final stretch filter, okay, final stretch filter, you are using basically 30 minutes. Okay, then when it comes to your graduation filter, graduated filter, you are using 60 minutes. Okay, so once you have a pop-up, right, and you have coins that are popping out right over here, you go in the chart, and assuming this is your chart, right, when it pops up, all you have to do now is figure out where block 0 and block 1 snipers and developers are exiting. So usually the first run up right over here, this particular level is very important because this is the roof of the momentum and you're supposed to demarcate it. When the roof happens, wait for the whole correction to finish. Remember, Elo wave ABC correction, this was where you know, the trade sort of ended up concluding. This is where the downtrend ended up concluding. So we have our two anchor points. You've got point 1 and point 2. So the support right over here is going to demarcate your block 0 bullish order block, okay, because it is the last trading candle that happened you know, when the downtrend ended up concluding and there was a pump. So on this particular trade, right, wait for the price to come and retest block 0. Okay, block 0 and block 1 order block. So that is your ultimate goal. So when it comes to this particular strategy, you are trading the support of block 0 and block 1. So wait for the roof right over here to be created, the roof and the base. Then you wait for it to reach support. So the reason why I ended up losing this trade right over here, because I was trading the breakout of the roof. You see, when it comes to slow momentum, it's already telling you that there is no fast momentum. So why the hell would you want to trade you know, the breakout? So remember, when I was backtesting this method, I wanted to backtest between trading the breakout and trading support. So when it comes to high volume, slow momentum, there are two types of trades that you can make. You can either trade the breakout, okay, trade breakout, or trade support. So on my analysis, trade support of block 0 and block 1, trade support of block 0 and block 1 order block. Okay, so the whole purpose of me backtesting this method was for me to find out which of these two methods is the strongest, which one is going to give you the highest odds of winning. Should you be able to trade the breakout, or should you be able to trade the support? The reason why I lost on this particular trade is due to the fact that I was using the first strategy, which is trading the breakout. And guess what happened? Trading the breakout was a bad idea because right over here, it didn't work. Trading the breakout only works with high volume, fast momentum type of trades. Okay, it doesn't work out with the high volume, slow momentum type of setup. Okay, so you're going to lose money when you trade the breakout. And right over here, I was specifically targeting the breakout. And guess what happened? It didn't work out and I got stopped out. So I hope that my sacrifice as far as using these two methodologies in order for me to give you the blueprint, I hope you guys are really you know, using this to the best of your advantage, and I hope that whatever amount of money I lost right over here didn't go in vain. and I hope that you guys are going to be using these strategies, because somebody has to sacrifice in order for you to tweak your methods. In order for you to figure out what really works, you have to sacrifice. And this is one of the reasons why I am not afraid and scared of sacrificing a little bit of money so that I can become a better trader. So I wanted to be very honest with you, because most of the times a lot of people don't really show you the reasons why things work and how they discovered that it works, okay, or rather it doesn't work. In this case, I proved it to you that trading the breakout, as far as slow momentum is concerned, doesn't work. However, if this was a high volume, fast momentum type of trade, if it was a fast momentum type of trade, trading the breakout would happen. So this is one of the reasons why, once you see the results that you're getting on your filters already in your head, you should be able to identify what methodology and what type of trading strategy you're going to be able to use. I want you guys to be very, very equipped with knowledge and all these different ways that you're going to be able to adapt to whatever trading situation that you have. And guess what? If I was trading the support and order block, right, I would have made very good amounts of money, like 3 times. Right over here it was an 88%, and the strategy is selling each and every time you hit the roof. Okay, so of course the price is going to go slightly above the roof, right? It's going to go slightly above the resistance of the roof right over here, which was around 178. It ended up going to 210. So whatever high prices that you get, you sell. So instead of me buying right over here, I was supposed to sell. Okay, you buy right over here because it has come back down to your level of support, and you just pretty much sell it right over here. So you rebuy this level, okay, because it has come back to retest on your order block. So it's a very safe entry. There's no way you're going to lose, because you already understand where the initial order block is going to be and where the support is as far as that order block is. Wait for the retest. This is a retest. You buy it up, you sell it, you won about 80%. You wait for the price to come back down to your support, finds to your entry right over here. You do that, boom, you have another 60%. So remember, 80% plus another 60%, you've got roughly 140%. Boom, the price comes back down again, and you're able to make another 80%. So 80%, 140 plus 80%. So you've got roughly around 210% profit that you got using this method. Of course, if the price comes below your order block, as far as block 0 and block 1 is concerned, if it goes and starts to find resistance right over here, this was resistance, just know that the trade has finalized. It's not really going to go anywhere, because previous support turns into resistance. So the trade is over, and guess what happened? The price went out, didn't recover. Okay, so more of the story, using this strategy, even if the markets are down, even if you're having slow volume, you're still going to be able to milk a 2x, which is very, very lucrative. So remember, the more of the story is trade high volume, slow momentum with this in mind. Never trade the breakout, only trade support and order block, only if you find support on the order block. If you find support on the order block, best believe the price is gonna probably, push up to the previous roof, and this is where you're going to be able to sell. So rinse and repeat that till it no longer works. How do you know that you can no longer buy the support? Just wait for the price to go significantly below it, like for example right over here, and see how the price behaves. Here it wicked way below the order block, but guess what? There was still enough support, and it ended up pushing up. But this particular level right over here was a different type of situation, because once it wicked below it, it didn't have enough momentum to push higher. So you know that, okay, this is game over. I can no longer stay or trade, and this, buying on the support is no longer going to work. So you exit the trade and just basically forget about it. So whatever amount of money that you utilized and, use right over here, it's a very good game that you were able to win, and you can no longer trade this particular trade because the game is already over. Block 0 and block 1 have officially been neutralized, and there's no longer support on block 0 and block 1. So the goodness about this method is each and every market season, whether it's a bullish season, a bearish season, these are going to be happening each and every day, like a multiple amount of times. Okay, so remember, with this setup, right, a lot of the lifespan is going to be about 250k. So the more you sort of tweak your filters, you could have lifespans of a million, even 25 million etc. It's all about tweaking your filters and just understanding what to expect. So I really hope that you guys like this method. I hope that you understood it. In case this was all foreign language to you, it means you do not really have the proper skills to understand and comprehend what I'm talking about. So what you need to do is book a one-on-one consultation with me and get your skills up. All right, in order for you to make money, you need to have very high skills. Okay, the reasons why you're consistently losing money is because you don't really have the right proper amount of skills, and you also do not have the right set of tools to protect your portfolio. So just send me an email. We're going to level you up and just basically be able to make you stand a chance in surviving at the trenches. The trenches are very difficult to sort of survive. So be very equipped with your knowledge. Depending on how long you've been trading, right? This is a very difficult concept to grab, and I honestly do not blame you. So before you head over to the comment section and say, look, I don't really understand anything, the first thing that you have to do is work on your skill levels. Trust me, this method does work. Okay, so in case you've got any other questions for me, please let me know in the comment section below. Remember, it's all about increasing your skills. You see, the more you want to make money, right, the higher your skill levels are supposed to be. Do not expect to make a whole lot of money or consistent money if your skill levels are below par. Okay, so yeah, of course, there's obviously an aspect of luck, but as somebody who wants to be really progressive, do not ever lean on luck. Luck is eventually going to catch up with you if you are consistently on your grind, if you're forever improving your skill level base, if you are forever backtesting. And by the way, do not always just wait for me. Always spend money to backtest. The thing is, do not be afraid of losing money, because if you get the right amount of skills, you're going to get back your money. So do not be able to be afraid, or rather do not be afraid as far as backtesting is concerned. So all you have to do in order for you to backtest different types of trading methodologies is just use a minimum amount. You can use 0.03, 0.01 and all that stuff. Just have a blueprint that specifically works with your trading needs, because each and every person is different. But if you get the blueprint, if you get the methodology, the reasons behind certain things are done, you're going to be able to customize and sort of rig whatever strategy that you're trying to use. That's the main message behind all my episodes. Do not come here expecting to be spoon-fed. All I'm going to do is give you, or rather point you in the right direction with the right mindset. Then go out there, figure out what works for your setup, because everything is different. Time zones are different. Our liquidity capabilities are different. Our skill level is also very different. So what works for me might not necessarily work for you. However, if you understand why I'm doing certain things and why I'm following certain paths, it's going to allow you to curve your own narrative and find something that suits you. You understand? So yeah, I hope you guys enjoy my mini rants. Okay, I really hope that these methods really help you at least become better traders. That's my whole aim. All right. Anyway, before I continue talking, you guys have been awesome. Subscribe to my YouTube channel. Check out all the links in the description box below, because that really helps me make a little bit of money. It shows me that you guys are very receptive to what I do. Thank you very much, and talk to you a little bit later.